65,000 by the end of the year. Let's find out why. Hi, everyone. Welcome back to Crypto Corner here on Schwab Network. I'm Jenny Horne. Let's dive right into it with our next guest, Adam Lynch, Director of Equity Modeling at Schwab Center for Financial Research. So, Adam, wanted to get your take on Bitcoin's chart, but also we have to talk about Grok's prediction for Bitcoin, as well as ARK Invest's Cathie Wood has also been quoted saying Bitcoin selling off is due to algos. So, curious all of your thoughts here.
Yeah, there's a lot going on in the world of Bitcoin, right? Let's get started with the chart. The past 3 years of Bitcoin performance is what we're looking at on a weekly basis. And you can see we're sitting around 66,500 today, which is actually up 3%. I like this longer term view because it shows how we've essentially round tripped since early April, going from 65,000 up to 120, back down to 65. And you can see here on the chart that Bitcoin is trading well below well below its 100-week average, but it still remains above its 200-week level there at about 59,000. That said, I think it's really important to watch this 65,000 mark. It has historically functioned as both support and resistance. You can take a look back at 2024 and see it oscillating back and forth between those values, with many traders looking for sustained close prices either above or below this level in order to confirm a trend. It's an important technical level representing a confluence of factors. The market also sees it as an important level psychologically. It's also a significant leverage, is often concentrated near that price, and a drop below it could cause a cascade of selling. Speaking of Bitcoin, in the most recent version of her In the Know podcast, Cathie Wood discussed its underperformance, specifically relative to gold. She described it as a byproduct of systematic algorithm-driven trading models. These systems essentially classify crypto as a high beta risk asset instead of a store of value, which can lead to moves like this. She also noted the investment environment overall is so risk off right now, where we see sell now, ask later industry moves of 10% a day. And finally, she also speculated that this drop has been fueled by newer, weaker conviction holders who may have entered at higher prices. And she ended the Bitcoin section of the podcast by remarking that it keeps making higher lows and that the overall trend has not been broken. Volatility, in her opinion, equals opportunity. And sure, how can we talk about anything these days without seeing what our favorite LLM has to say? Well, this week, crypto analyst Jesse Eckel laid out a case for the next crypto bull market being the biggest one yet, fueled by AI. One of his supporting arguments came from Grok 4.2 Heavy, an AI model that is ranked first in live trading competitions. Its Bitcoin prediction is for 155K at the end of 2026 and 240,000 at its high in 2027. Grok points to money supply expansion, liquidity growth, ETF inflows, and regulatory clarity as its main drivers. Now, Eckel also said that he treats these numbers as directional rather than precise and expects around 50 days or so of consolidation before any breakout. That would place any potential move higher around early April.
Okay, and so earlier today, we also did hear from stablecoin company Circle. And so walk us through their latest earnings and perhaps what that signals for the broader crypto space.
Yeah, buckle up for this one. Circle has clearly struggled since its IPO back in 2025. The stock reached a peak of almost $300 per share. However, it's dropped by more than 20% this year. Fortunately for Circle holders, today it was able to claw back all of those year-to-date losses and maybe a bit more. Last I checked, it was up about 22 or 23% on the day. Circle, which just as a quick reminder, issues the dollar pegged USDC stablecoin, today reported earnings of 43 cents a share for the fourth quarter, beating Wall Street analyst estimates of 16 cents. Revenue and reserve income totaled $770 million, which was up over 75% from last year and well above analyst estimates. The amount of USDC, which is the second largest stablecoin in circulation behind Tether's USDT, grew to $75.3 billion at the end of 2025, which is up 72% from 2024. The market clearly likes this increasing adoption of USDC usage, particularly during a softening crypto backdrop. Another positive sign from this morning's call is how the firm continues to diversify its revenue sources beyond the income that they earned from reserves. Circle also offers a subscription and services business, which grew to 37 million from just 3 million the year prior, and they expect that figure to be in the range of 150 to 170 million in 2026. So overall, this was a fantastic report. Stablecoins act as a blockchain based transaction model rather than as a growth asset, and quarters like this may help Circle really hammer home that distinction.
Okay, and I know that it's not always, the even playing field, but I do feel like anything with crypto exposure, actually, from an equity standpoint, has had a really nice earnings quarter. And so I'm not getting enough credit, but at least Circle clearly is today. But finally, a fascinating topic that you did pitch to us this week, and that's the disconnect between what investors think is happening and what's actually happening in crypto. So tell us more about this.
Yeah, I really like this perspective that the author, Matt Houghton, the CIO of Bitwise Investments, took. Yesterday, he posted this really interesting memo why, in his opinion, there's such a big disconnect here between what investors think is happening in crypto versus what is actually happening. He drew some really interesting parallels between the time period where he entered crypto, which was back in 2018, and today, specifically focused on something called the anchoring bias that many investors have. Back in 2018, they were anchored on Silk Road and Mount Gox, both massive bouts of volatility that kept investors away. He thinks that today's investors are paying too much attention to the last year of crypto performance while missing the bigger picture. Because everywhere we look, Wall Street is screaming that finance is moving on chain. Paul Atkins, last July, the SEC chairman, launched Project Crypto, an initiative aimed at modernizing securities regulations so that America's financial markets can move on chain. Whether it's BlackRock, Apollo, Bank of America, Wells Fargo, there are many signs of industry adoption. And the amount of dollars that could come on chain is enormous. ETFs hold 30 trillion. Stocks are a 110 trillion market. Bonds are 145 trillion. Today's entire tokenized market is only $20 billion. So if Larry Fink is right, and he's the one who said every stock, every bond will be tokenized, then it means tokenization can grow by over 10,000 times. But the market can't see it. As Houghton wrote, they look at crypto and still see a punk skateboarder with tattoos. They don't realize he's shaved, put on a suit, and is now deploying infrastructure that will underpin the next generation of capital markets. So the real challenge is how to profit from this opportunity. Will the value of tokenization accrue to public L1 blockchains like ETH or Sol? Will DeFi tokens surge, or are the tokenomic challenges associated with DeFi too large to overcome? Let's say the value accrues to companies building in this space and not the blockchains. Well, then who benefits more? Is it incumbent firms or newer, nimble crypto native ones? Nobody knows the answer to these questions yet, but this disconnect is likely to create a significant opportunity. And Hogan argues that rather than trying to prematurely pick winners and losers, focus on building broad exposure to the space, while the market is still mispricing the structural shift.
Yeah, and a really interesting article, and I'm glad you brought it to our attention because one that is definitely worth reading the entirety of. And so appreciate you for bringing that to, of course, our focus. But appreciate it, Adam Lynch, for all of that breakdown. That's going to wrap up this edition of Crypto Corner. To catch all of the episodes and a whole bunch more market commentary, subscribe to the Schwab Network YouTube channel. I'm Jenny Horne. Have a wonderful week.